Hello everyone, my name is Zach, and welcome to On Cash Flow, where I help you become a master of your own cash flow. Now let's get started. Roth IRA withdrawals. Just withdraw $100,000 after age 59 and a half, and it's going to be tax-free. There we go, problem solved. Just kidding. But seriously, Roth IRA withdrawals can be a very useful part of your retirement strategy because, yes, money that you take out, as long as they are qualified withdrawals, are going to be tax and penalty free. But there are many other strategies that you can utilize in order to spend six figures and pay $0 of federal income tax. And the next one I want to talk about is the long-term capital gains tax. So this would mean that you have assets in a taxable account. And if you are selling off investments in a taxable account and they qualify at the long-term capital gains rate, you can realize a lot of capital gains at 0% tax. For example, if you are a married filing joint, you can utilize long-term capital gains up to $94,050, and it would be taxed at 0%. And keep in mind, that is just the gain portion of what you sell. So if you have cost basis built into that, you're not going to be taxed on that. For example, if you purchased the assets for $50,000 and you sold it for $100,000, you would only be taxed on the gain, which in this case is $50,000. And if it's a long-term capital gain and that was your only income, then it's going to be taxed at 0% federally. That's why a taxable account and long-term capital gains can be a great tool if you're trying to spend six figures and pay $0 in federal income tax. And by the way, I just want to mention here real quick that even if you're not retired yet, even if you're still working for a living, you can also earn six figures and pay $0 of federal income tax. And I have a whole other video for that, but more on that later. Because there's another trick that you can utilize when it comes to a taxable account, and that is qualified dividends. Qualified dividends can be a part of your strategy because qualified dividends are taxed at the long-term capital gains rate, which means you have a very large amount that you can realize and not pay any federal income taxes on. Just like with the long-term capital gains tax, if you're married filing jointly, you can realize up to $94,050 and it would still be taxed at 0%. Qualified dividends follow the same tax brackets as long-term capital gains. So the first two tax brackets are taxed at 0%. And then only after you surpass those first two brackets, you actually begin to get taxed on qualified dividends. If you are a buy and hold investor, like I would advocate you be, then most likely your dividends are going to be taxed favorably. Favorably. Yeah. You're most likely going to have the vast majority of your dividends be qualified if you're investing in index funds and you're holding for a long time. Because the requirements to make an ordinary dividend into a qualified dividend are relatively easy. And you're pretty much automatically going to meet those requirements if you're that kind of investor, a buy and hold investor that invests in index funds. So we've gotten through the taxable account. Now here's another great part of this strategy for paying $0 in income tax, and that is the standard deduction. The standard deduction automatically allows you to have a certain amount of taxable income and still pay $0 of tax on that income. So think about the standard deduction as kind of like the floor of taxable income that you can have and still not pay any income tax on it. For example, if you're married filing jointly in the tax year of 2024, then your standard deduction is $29,200. And that means you can have that amount of taxable income, and then the standard deduction will eliminate that, and therefore it will not be taxable income anymore. And if you are retired at a more traditional age, or if you're just over the age of 65, then you'd get an additional amount added to that standard deduction. So if you're over age 65, you get an additional $1,550. And if you're married filing jointly and you're both over age 65, then you would get $1,550 more each. So definitely don't forget about the standard deduction in your strategy when it comes to paying $0 of income tax. Now really quick, this video took a lot of research and effort to put together. If you're enjoying it so far, I would really appreciate it if you hit the like button on this video. Now let's move on to an income source that is probably going to fill up that standard deduction, and that is Social Security. So if you are retired, then you're probably going to be, taking Social Security at some point, and therefore you're going to have this baseline of income, which is kind of like your floor of income. You're going to be getting this amount in Social Security, and it may or may not be taxable. And if you're going to be spending $100,000 a year, then it's probably going to be taxable. This is my fundamental understanding of how it would work when it comes to Social Security and paying $0 of federal income tax. Well, according to the Social Security Administration, the average benefit is $1,915 per month for retired workers. And also according to them, up to 85% of Social Security income is taxable if your combined income is over $32,000 if you're married filing jointly. Now, there are multiple formulas on how to calculate how Social Security is taxed, and I am not well versed in that. And so I will be using a calculator to put all of this together to show you that you can have many different kinds of income sources, and you can spend over $100,000 a year and still pay $0 of federal income tax. But really quick, this leads me to the big question. I want to know from you in the comments below. What is your primary strategy for reducing income taxes when it comes time for you to retire? Or if you're already retired, what are you doing to reduce your taxes? Please let me know in the comments below. I'm really curious to hear what you have to say. And now let's put all of this together, everything we've learned about how to realize income and not pay any taxes on it in retirement. So here's the scenario I'm going to be using. I have two retired persons, and they are age 65 and over, and they are married filing jointly. And this is for the 2024 tax year. So in this tax year, their goal is to spend $100,000 per year, but they still want to pay $0 of federal income tax. How are we going to make that happen? Well, luckily, over their working career, they have diversified in what they invest in different accounts. So they have money in Roth accounts, they have money in traditional accounts, and they have money in a taxable account. So they have many of these different, tax buckets in order to pull from to create their overall tax strategy. The first thing we're going to do is we're going to fill up the floor first. We're going to fill up that standard deduction. And that's going to mostly come from, you guessed it, Social Security income. So their standard deduction starts at $29,200, and since they're both over the age of 65, we can add $1,550 times 2, so we get a total standard deduction of $32,300 for this couple. And then I'm going to put that they're going to be receiving about $30,000 in Social Security benefits. Now they're also going to be taking $10,000 per year from their traditional accounts. Then they're going to utilize their taxable account. So in their taxable account, it generates about $10,000 of qualified dividends. So that's going to be money that they're going to withdraw, that $10,000 that it generates. In their taxable account, they're going to sell off $50,000 of assets. And their cost basis in this example is 50% for easy math's sake. So they're actually only going to be taxed on $25,000. That puts us at $100,000 of total income with a $0 tax liability. And the great part is with this strategy is that they can keep their Roth IRA untouched until they need to. So if their taxable account is running low and they need to supplement that, they can just start using their Roth IRA because those withdrawals are going to be tax and penalty free. And of course, I'm going to use this really cool handy dandy advanced tax calculator online just to show you how these numbers are going to add up, and they actually are going to equal a $0 tax liability. That is just one example that I made off the top of my head. There are many different combinations that you can use in order to receive $100,000 of retirement spending and pay $0 of federal income tax. Any kind of combination of what we talked about could work. Now, even if you are still working, you're not yet retired, you can make $100,000 and pay $0 of federal income tax in some circumstances. And if you want to know how, I have another video for you, okay? That video is going to pop up on the screen right after I get off the screen. Thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.